Magandang hapon. Salam alaikum. Privet, dobry den. This is the languages with and greetings you can hear in our office when you come to Manila. If you come to Manila and come to our office, we're an international organization, and we have a very good team that is gathered from different businesses. I'll explain a bit later. What we're talking about butterfly effect. What is butterfly effect? We're yet small startup, but we were able to create a shift in the market and in structural changes in the market. Structural changes in very challenging in the market where the most important thing for us as a fintech, data, which is not yet available, the good data is not yet available. We're doing things and we're doing steps that the data would be available, not only for us, for a lending institution in the market, but also for the whole market. And this is because we are the strong team. As Shakespeare would say, we have some metal in our bosoms, and this is probably one of the reasons when we're able to move the structural change. We were founded some time ago by Tinkoff. This is considered to be one of the best fintechs in the world. It's showing a 40% return on equity for the period of more than 12 years. And I think this is what we've been able to gather from our mother company some time ago. Extreme focus on profitability, extreme focus on excellence in most of the value chain activities that we're doing. And we've gathered the team that's doing this, but also we've got the team coming from very international markets, Czech Republic, Russia, Vietnam, Philippines, Indonesia, and other countries. And I will explain a little bit more about why it is important that we have an international team in the Philippines market. Market is very ripe, I would say, for us to start the fintech and then be the fintech in the Philippines market. So right now we're talking about us in the Philippines. We're eyeing with one eye. We have my co-business partner and my friend, and then my brother, almost my brother, who is doing the business together with me, is looking at not only the Philippines right now, but something close here. But we'll talk about the Filipino market. So we're starting with something very focused on lending. With our intention to build a bank, with our intention to build a very diversified products in one application, which our organization with our previous mother company was able to do successfully, 30 million clients. We're starting very simple, but lending business. And I'll explain a bit more of the reason for doing simple business, offline business. We started offline business, and then we expand into debit cards. We will expand into saving products, and then fully fledged called lifestyle banking application. But we start with something which is we can scale first. Second, we can be profitable. The two things which you don't often see from the startups. We're focusing on this. Once you're doing this, then you are safe to start to expand into the other product categories without burning too much of the investors' money. And we will talk about a little bit our key factors of success. I think many people would say these are the factors of success for many organizations. Right. What we've learned, culture, this is on the right angle. Culture is one of the most important factors why the organization in the international market doing business in very challenging market like Philippines could be successful. It's the glue of what we're thinking about other things like data science, technology, test-learn approach that allows us to understand the market better, also on this market to be very fast in what we're doing. Let's talk about the market as we started to give you a bit of a hint that it has a lot of potential. We see that GDP is growing with a healthy 6% over a few years and will continue to be growing. It's one of the factors, but also looking at consumption. Consumption is also one of the highest growing in the market in Southeast Asia. And if you go to the Philippines and you go to the malls, you see that most of the people are having a very good time in the malls. So it's really a good representation of the country. You can see that penetration of credit in GDP, both, we believe there are a few factors that will influence it. First, GDP will grow, right? consumption will grow. That's understandable. But also what is happening is structural change, because a lot of lending, a lot of credit is still in the shadow area. So an organization like us who will be able to do business in this challenging environment, explain again about what is the challenges, will be very welcomed, will be profitable, and then we'll be able to change the market as well. What is one of the important factors as well is very low penetration on banking products. Banks are very much focused on their turf right now, which is a good factor for us. Important, again, I have factor of population. 140 million population. It's a big country, right? But over 50% of the population is less than 24 years old. That means next 10 years, approximately 20 million of people of workforce will join, and also they will join the financial services. And in the structural change, we see that the GDP per capita grows, and what is happening with that mass sector is coming more into mass affluent sector. A bit of a complicated slide, just to make it more simple. Banks are here in this area where the interest rates are low and then security is high for them, where they're working only with mass affluent sectors. Here are the loan sharks, like gray area, very high exorbitant interest rates, and this very big area where fintechs can play. Why? Because banks don't understand how to do the risk with alternative credit. We understand it. We want this risk, we want to go to this area, but we want to be profitable at the same time. So the fintechs are here, estimate like approximately 30 million customer base. So we're, I think we call it, it's not maybe blue ocean, but this is a big territory where fintechs can take place. Right, this about the problems. One is in Tagalog, in the Filipino language, one of the Filipino languages is no, not available. A lot of things are not available. There's no centralized data on IDs. And if you look at the types of IDs that are allowed in the country, you can see this is like approximately 20 of them. So if you have 20 IDs and you cannot verify this ID with the person in the database, what's happening? The customer is coming to you and saying, for example, I'm Arna Go, I'm from Cebu. And what we say, if we cannot check, probably we have to trust you, maybe, right? This is our answer. And if you look at this nice card, this is land transportation, this is driver license. You can see that this is my face there, right? But the name is different. The name is Troy. It's not real. I was able to do this document for approximately 2,000 peso. And if you would like to have an address, I'll give it to you in Manila, in Loreto Street. So can you imagine if there is no ability to identify the person and ability for 44 bucks approximately to make this nice document? What is the area for the fraud? So we should be very focused on not only alternative data, but also being able to recognize biometrics, face recognition, and to prevent fraud. If we go further and then look, okay, these guys in this area, very challenging, very promising, what they're doing. We started with offline. Although it's counterintuitive to our hearts, we're very online people, very digital based. But we understood that there should be some steps in the way how both us and the market should evolve. So we started it offline, where we believe both the product, its point of sale, and the customer can come to us and buy furniture, buy mobile phone, or buy computer, buy installments, could be the area where we can healthy grow with profitability and with scale. But for that, you have to be able to cover approximately 7,000 islands. So during a span of 1 year, we were able to grow into 94% coverage of the Philippines. We have more than 2,500 places where now we're represented, and more than 610 merchants. It's approximately 50 merchants per month we have to onboard, meaning that, you have to be very efficient in the way how you do this. Again, I was talking about the competitive advantages, I was talking about the culture, and this is really why entrepreneurial spirit, it allows our colleagues to do business very quickly. That is the reason why we were able during 1 year time to grow with approximately 50% growth rate. We've achieved approximately 30 million portfolio, but I think that this line is the most important one. You see this line, this is the first payment default. First payment default coming from a relatively high, this is a high amount, and decreasing approximately 2 times. This is the hike. The hike is about test and learn. We were talking about test and learn, and this is the hike, right? So we've done tests. We understand we're doing these tests, but they're controlled, and then that's the reason you can be able to decrease the risk. So this is the area where the growth of volume and at the same time decrease of risk in lending, this is the green pasture. This is the territory where everybody wants to be, where the profit is coming. Of course, the secrets of doing something successfully are in many things. You cannot do in the value chain something good, something bad, right? It doesn't work. Everything should be good, but something should be sobra good. Sobra in Tagalog is super good, right? Something should be super good, and risk management and lending should be super good. In the territory where you don't have traditional data, what you do? First, you consume the data from what you have with alternative sources, and then we were able to receive scores from telcos, from social media. We do been able to receive from some alternative institutions bad data, and we consume a lot of information on the device itself. But again, you put it into algorithms, you put it through the machine learning, in addition to very rigorous anti-fraud management. Only this way you will be able to go into the risky area, still with a high interest rate, relatively low risk, but improve marginality. And this is the same chart, but here, an important chart where you can see that our calculation of net present value, another very important factor for success, for the being able to be profitable, we look at all costs and all cash flows, as usually done, right? You usually, if you want to invest somewhere, you calculate net present value from the project. But we calculate net present value from each customer that comes through the door. So what is happening is that we're looking at how we are issuing loans and then come into these green area when each loan would be profitable to us. It's very rare case, and then you can check it probably from BNPLs or point of sale businesses, that each first loan is profitable. And then this is the approach that allows very focused organization to come to that green pasture territory. A few words about IT. I mean, of course, everybody says that IT should be fast, but the contemporary environment, I think, allows us still be very efficient, have a strong team of IT people, but what they're doing is they're focusing on something very specific and very value added, like, for example, our risk management, our products, but we use low code, no code, and something that we can outsource as well. Why? Because it's done better than we should be doing, and it's not the core competence of us. Of course, a lot of when people talk, it's good, but numbers are really talking about themselves. What are you doing as a business? If you look at us, I would say again, and reiterate again, looking at us is very important to look at this number, this net present value. Net present value is growing from 9.3 in 2023. We estimate it's going to be 50 in 2024. Why it is important? Again, every customer goes through the door of our institution the first time because we can cross-sell and have additional profit. But initially, if you can do the profit, it's a home run. We're growing with number of customers, we're growing with the portfolio, and then eventually you come to the territory when your business, and we plan in 2024, our business will be already profitable. This is the territory of, we call to ourselves AHA. So it's AHA is, what is it? It's AHA territory. AHA territory for us, we've done it, and now we have to grow and scale with the maximum speed what we're doing. And AHA territory for the investors. So if anybody of you who is a potential investor, come to us. It's a good time right now. About us, and then the butterfly effect. Who was the famous sportsman who was talking about butterfly, flying like butterfly, and then punching like a bee, Muhammad Ali, right? What we're doing, we're yet small organization, but we move the market. We move the market to make it more transparent, not only for us, but for other players. For other players, and then for efficiency and reduce the asymmetry information in the market. So no data, right? Yeah, very limited amount of data. We agreed with a number of institutions to create an alternative credit bureau, a very professional one. At least we'll start with the bad data to exchange the bad data initially. But later on, we'll probably do a more sophisticated product as a credit bureau. But this is the step that allows many lending companies, especially in fintech area, to be much more efficient compared to the situation right now. About us, so this is what we do as a small organization, but moving the market into the right direction. What about us as a company? Of course, we're looking to build a bank where fintech bankers. But now we'll still be focused on credit, introducing some new very interesting market products like credit line into the market. But also we'll do something which is relatively unusual, where we do business together with those companies that have a lot of customer base, but they're not into financial services. So we become part of their product offer that is usually now called embedded finance. So this is what you can expect from us in 2024. And yet, next step for us would be a bank. So this is about us. Thank you very much.